This trading approach has been great for many traders and actually has helped many traders to turn around their trading careers. And as surprising it might seem, this trading strategy is not trend trading but range trading. Because I like price action and trend trading very much, but I have to be honest, range trading might work equally as well if you have correct approach and if you know how to use it. So in this video we will see just that. So let's dig into range trading strategies. Okay, first things first, what is range trading? Well, as the name might imply, as opposed to trend trading, range trading is strategy where you are making money when market moves in range, not in trend. Let me give you an example. Here we have euro against dollar currency pair, and now we see that markets move in fluctuations. They have range bond markets, as we could see for instance here, and then they have trend markets, which is continue obviously with ranges, that it trends, and you get an idea. Well, the basic patterns of market is that it's for 60-70% of the time it holds their ground as a range bound market, and only 20-30% it trends. So in range trading you have most of the trading possibilities all of the time, and this is one of the greatest benefits of range trading. You don't have to wait for good markets as it is with trend trading. You simply could use almost all of the market conditions because mostly they will be on the range. And how to use it? Well, here is the important thing. If you want to trade as a range trader, you have to trade on support and resistance lines. And the whole idea is to correctly assess them and to bet on the fact that they will go into previous direction. Let's open this same chart and I will give you 3 examples on how range trading works in practice. It will be with oscillators, it will be with Bollinger Bands, and it will be with candlesticks. So let's start. Well, in the simplest terms, range trading could be used with oscillator such as relative strength index, which is known by everyone. And how it looks in practice? Well, you see, relative strength index works with the idea that markets could be either overbought or oversold, and when they do, they're bound to go back into previous range. For instance, we have levels of 70 and 30. Once markets are getting below 30, they're oversold. Once they are over 70, they're overbought. And idea of range trader is that we effectively are making money on the idea that they will go back. So for instance, here is a good example. Markets here, you see this peak, they are extremely overbought and way over 70. So idea is there will be consolidation into prices and they would fall back. And this is precisely what happened. Markets were overbought and then they started to fall and reverted back to previous range. And here we have similar situation with oversold pattern. Markets are closing to 30%. You see it here. They fluctuated around this price point and then they reverted upwards. So you could see supply and resistance lines within relative strength index such as 70 and 30, or maybe 80-20 if you want to have more precise strategy. But there is no black and white answer. This is just an idea to have upper bracket and lower bracket within relative strength index, and you will bet the idea that they will go back into previous range, like we got it here and here. So this is a very simple approach with relative strength index. Let's go further. Next approach is with Bollinger Bands. Bollinger Bands is related indicator to moving averages. An idea is that it's very simple. It shows moving average and deviations of moving average. So it could be used both as a trend market to simply see whether the price is above or below moving average. For instance, here price is above moving average and above Bollinger Band levels. So this is strong upwards move. Or it could be used in reverse to see how it moves within certain ranges. So we see if this is not above or below Bollinger Band levels, but whether prices are moving within those levels. And these upper and lower brackets of Bollinger Bands could be used as a support and resistance lines as well. Let me give you an example. For instance, here it worked really well. It closed just below resistance line, close it up again in the next minute to close it above it, and it moved in tandem to next support line, which was upper bracket, and then they moved downwards. Of course, when price moves are really strong, it will go out of that. No indicator will be perfect, but this is simply just to give you an idea that moving Bollinger Bands works really well as a support and resistance lines. And if you use relatively short indicators as and now, it's quite volatile, but if we adjust that to, for instance, more acceptable levels such as 30, we could see that it goes to these borders relatively well. So you could play with it, but Bollinger Band bands, it's more useful tool as more analytical tool. It's not that good for precise entries and exits, but just to assess the situation. For instance, here markets are falling. Whether they'll be falling or going in reverse, you have to make a couple of additional indicators to verify that. And for that, Japanese candlesticks works really well because they could be showing whether the price moves has been exhausting themselves. For instance, I will give you a good example where we have it. Well, we could have it here. For instance, we saw that markets were strong. Then we saw this small pattern, which is pin, and markets didn't move above it. So it closed just below Bollinger Band, showed the pin, which meant price moves had been extended themselves and reverted back and actually went really strong downwards move. So you could get really good money here. So this is how Japanese candlesticks works best. They also don't work very well in a vacuum, but if you see, for instance, combination patterns with Bollinger Bands and Japanese candlesticks, you would see really well how those overextended moves work. This was a good example. There are a couple of good examples here and here. Yes, they were slightly above it, but since they were above it, we saw candlestick pin pattern, and then they started to fall back again and went to previous level and actually went lower. So it's not exact science, nothing in trading is, but you could see the pattern. Prices are fighting against upper level of Bollinger Band. They haven't really extended this move yet, and they are sort of moving into range, but you see markets go higher, show that pin level, fall back again below moving average, and they started to make downside moves. So this could be realistically used in this sort of a combined relative strength index. You see prices are overbought here. Prices are slightly above upper support level for Bollinger Bands. So two indicators indicates that price move might be extended themselves. Then you see pin pattern with Japanese candlesticks, and you see price slowly are going downwards. So this is kind of 3-point move where you could see those extended confirmations for several indicators, and markets went short. So if you hold your position here, you could make nice little profit, and it could work similarly on downside as well. You could see here markets are moving lower. Okay, here is not completely oversold indicator, but still it's pretty low. So that means price move has been very weak. Here we could see pin pattern, and prices are below moving average and closing to Bollinger Band, and then they reversed. So this is how you could actually stack it and combine it in the best way if you want to have a range trading approach. But if you want to see this in more professional manner with a lot more markets and a lot more examples, I have good suggestion. Join my Telegram channel, because there you will be seeing how this works in practice, and you will see real-time signals on precise points how to open and close your market, which time frames to choose, and what will be the best markets to you to trade. It's all completely free, but let's move on. What's the most important thing here, as with any other trading strategy? Well, this is of course risk management, because as you see, these price moves are really narrow, and more often than not you could get whipsawed because prices might not go into your direction just yet. So you have to be able mentally prepared to place lots of trades which will be either break evens and with small losses. And here of course risk management is a must, because well, there might be cases when the markets are working and when they are not working, and here you absolutely have to have top-notch risk management, and you have to risk very few percentage of your total capital. So less than 1% probably is the safest bet for you, because you will have a lot of trades and many of those trades wouldn't be succeeded. So this is how it works in trading. Sometimes you get really good markets to trade, sometimes markets are choppy, but risk management in combination with with this example, range trading strategy works best. So use these tools and use correct risk management. This is what we done today. We explored basic idea of range trading strategies with 3 major approaches: how you can use it with oscillators or relative strength index, how you could use it with Bollinger Bands, how you could use it with Japanese candlesticks, and how actually that works together in practical example in my euro against dollar markets. We saw a couple of long trades, a couple of short trades, and I showed you good idea how you could actually start to work on that in practice. And this is how you actually could go to it. Start slowly, start with small amounts or demo account and test it, and one more time test your strategies, or simply join my Telegram channel where you will see how it's done professionally. So thanks for watching this video, and till my next lesson. Let's make money together.